Hi, Tom. Hi, Sherry. Property taxes are probably the single largest expense a landlord will pay, and as a consequence, it is extremely important to ensure that the taxes are managed correctly. Depending on the specifics of your lease, taxes are collected from your tenants using different methodologies. In a typical office or industrial building, it is usually on a proportionate share basis, but this is not always the case. With mixed-use properties, retail tenants often pay a higher amount based on their higher rent, and the remainder of the building pays on a proportionate share basis. No matter what the methodology, it must comply with the terms of the lease, and if your lease is silent on the subject, then it must be fair and defensible. Your property manager should be able to guide you through this process. This is important for both landlords and tenants because you don't want to have one class of tenant in the building subsidizing the other tenants in the building. Also, as a landlord, if you have a vacancy, you don't want to be paying the taxes on the vacant space. If you have a mixed-use property and your operating costs seem high for your office tenants, this is one area that you should definitely look into. Once the property manager has fairly divided up the property taxes amongst the tenants, the job's not over. A good manager must also have a proactive approach to ensure that the overall tax bill is fair. Each year, BC Assessment assesses every property in BC. Your property manager should arrange to have the assessments reviewed to see if the assessment is fair and reasonable or if an appeal is necessary. Sometimes the assessment authority generates an artificially high value in comparison to similar properties or has your property placed in the incorrect classification. Some ways to compare your property to others is to look at municipal GIS maps and also broker listings. We recommend hiring a qualified tax consulting firm as they will be able to find ways to reduce your assessments for both your land and your building. To calculate the tax, the yearly assessment value is multiplied by the mill rate that the municipality sets, and the mill rates are typically released in March or April every year, and the tax is calculated by May. If a property manager can successfully lower the assessed value, it means that the taxes have the potential to be reduced significantly. In this difficult leasing market, this is something that landlords definitely should look into. We do this every year for our clients, but not all property management firms do, so you should check with your property manager to ensure it is being done. Also, many tenants do not realize that the property manager is doing this on their behalf. Your property manager should be communicating this benefit to your tenants as well. The cost of the landlord for the initial review is negligible. Most tax consulting firms will perform the work on a contingency basis, which means that you only pay if there are tax savings to be had, and the payment can be made out of the tax savings. The benefit for landlords of being proactive in this manner are reduced taxes, reduced operating costs, potential for lower vacancy, and better renewal rates. It is another way to demonstrate to your tenants that you are managing the property well and that you are dealing with the single largest annual fixed expense. This is Rod Fram for Radio Real Estate.